Hey guys, so I'm just going to do a breakdown on how I took this trade. Let me just remove some of these EMAs, don't need them for this as it was more of a swing trade. So first of all, when I come in the morning, I mark off my order blocks. So what an order block is basically it's just like a demand zone, but it's an ICT concept, so it's a different way of looking at it. So how you mark an order block here, see we have a big sell off here. First of all, let me just say we are in a bullish market. This is not a bearish market under any circumstances. As you can see from the Edge Finder data that I send in as well during the day, we are very bullish at the moment. So that takes into account the COT data, retail positioning, seasonality, trends, GDP, your retail sales, inflation, employment change, unemployment rate, everything. It takes everything into account and scores it. And it's very bullish at the moment. So it's the top of the chart. So this is a massively bullish market. We have lots of investors and hedge funds putting in their longs in the area that we've seen today. So if we drop down to the 15-minute chart, you can see my order blocks. So what an order block is, we see this big sell off here and we have a lot of buyers coming in and pushing the price back up. And we've sellers coming down, trying again to retest this and putting in a higher low, pushing it back up. We have a retest here again and a liquidity sweep of this area here. And the buyers put in a lot more orders here and push it up. So here we have an order block. So how you mark your order blocks, I take in as many. I'll just delete this and mark it again. Want to pick up as many wicks as you can. So all these wicks at the end here. So you have your liquidity area and you have a lot of orders being put in. So I'll mark this as a green order block for lots of buyers. And the ICT says it's an order block instead of a demand zone, but basically it's the same thing. It's a different way. I like saying order block because it puts it into my head. So what does it mean? It means there's a lot of orders going in. There's a lot of buys going in. There's a lot of buyer pressure here and pushing up. So down this area. Again, you see another order block here. The sellers coming down, buyers pushing up. Sellers coming down, buyers pushing up. So lots of buy pressure here on our higher lows. And we have our liquidity sweep here that might be taken, might not be taken. And we have another order block up here being set. So I'll just delete that one and draw a new one. So I could see earlier, before I took this trade, I could see earlier that another order block was being set here by the wicks. And I marked that there's a liquidity that could be swept underneath this. So what did we do? We had all the buyers coming in, putting in orders up here. We retested this area, and this is where I wanted to take along in this area. We retested the area, came down, took all the liquidity under here, and then we're going up with massive buy pressure here, which I potentially think we're going to come back up to this high up here, definitely by next week, I'd say, unless something changes, like Trump comes out and says something mental. But that's what I can see happening. So anyway, so I took this trade. So how did I take this trade? I didn't take it on the 15-minute. This is just where I look for it. And I'm like, okay, this looks like a good area to buy. So when it comes down and takes a liquidity, I'm going to look for a long. So drop back to the 5-minute chart. I use Heikin-Ashi candles, and they help me. I just think they're really good for spotting the reversal. And it's easier to read than normal candles, and they still have the wicks. So we see here where the sellers come down, swap this liquidity, and we have a candle here, Heikin-Ashi candle. You can look them up. So this candle here is basically saying that there's a wick at the end and a wick at the bottom. So the seller's pressure is after breaking down, and we've buy pressure coming in. So I knew we were going to get a reversal here. So I waited for that candle to close, and our next candle was a nice big green candle. So once that closed like that, I took a sell buy trade. This is just on a practice demo account just to show you, but I did this on my swing account. So this is where I entered the buy. I set my stop loss. My stop loss, I set it just below the lowest low, and you can move that as a trailing stop as you go. So that's where I set my stop loss, just below the lower low. Liquidity was already swept, so it wasn't really going to come back to here. And I set my take profit was just up here, where I had seen some sell pressure coming in previously. This is probably still going to ride out, so you could go much longer, but that was a pretty easy trade to take at a 3-to-1. And yeah, so this MACD, so I have the MACD set up here at a 3, 9, and a 5. So this is a quicker MACD than most people use, and the reason why is because MACDs lag a lot, so they're not going to give you a great signal. So I actually picked up the signal before this candle even closed with this quicker MACD. You can see here we were crossing above. The faster MACD, the 3 was crossing above the slower. And I knew, okay, we're probably going to get a breakdown here of the sellers, and the buyers are going to come in. So this just gives me a nice little signal. I don't use it on its own or anything like that. I use the candles mostly in price action. So yeah, I got everything I needed there to enter the long. And yeah, it was a really good trade. Thanks, guys.